Here we are again. Thank you for coming back to the second Greek Corporate Governance Summit 2020. It looks like these network breaks that we're doing, these 20-minute breaks, are quite interesting because a lot of people are communicating with each other, exchanging cards, ideas, and presentations, and comments, and some gossip, I guess. So these breaks are quite interesting, I must say. Now, the next speaker is going to talk to us about the Poseidon Principles. Mrs. Pinelopi Kassani is a British-trained chartered accountant and partner at Moore Stevens Chartered Accountants since 2019. She has more than 16 years of experience in providing audit and consulting services. So I think it will be very interesting to listen to you, Mrs. Kassani. Thank you for being with us.
Thank you. Hello, and thank you for having me here today as a presenter at the second Corporate Governance Summit. It's a pleasure and an honor to be here among your distinguished speakers and guests. Today I'm going to... Thank you. Today I'm going to talk about how ESG factors are gradually, well, I would say rapidly, to be honest, becoming a game changer in bank financing. And I am going to give an example from the maritime sector, which I hope you'll find interesting. Now, this is a huge subject and it's currently developing. I only have 10 minutes, so I'll do my best to summarize the main ideas. First slide, thank you. Next slide, please. Now, as you would expect, the maritime sector faces significant ESG risks. Why is that? Well, first, because shipping has a big environmental impact. Inevitably, there is rapidly increasing environmental regulation, which gives rise to sizable compliance costs, and it affects investors' returns. There's also risk because there are many stakeholders in shipping. You have investors, you have commercial managers, you've got charters, banks and leasing companies, classification societies, the IMO and other regulators, the seafarers themselves, and of course, you've got the general public. Another factor is the heavy investment in eco-friendly technology in order to reduce the environmental footprint. So financing needs, as you would expect, are significant, and therefore so is leverage. Last but not least, you have technology and you've got data science, and they both create threats and opportunities. Now, to make the maritime sector greener, the key players joined forces into an initiative which was launched last year and is known as the Poseidon Principles. Next slide, please. And the next one, thank you. On the 18th of June last year, 11 leading banks, which at that point represented $100 billion of shipping finance, they came together to sign the Poseidon Principles. The principles were created by the banks and they were signed by the banks, but however, the banks were assisted by other key stakeholders in the industry, mainly the International Maritime Organization, the IMO, and other approved parties like classification societies, but also ship owners. And what was the objective? Well, the objective was to help the industry reduce its environmental impact. The IMO has set a very ambitious target to reduce the annual greenhouse gas emissions of the industry by at least 50% by 2050, based on 2008 levels. Next slide. The Poseidon Principles, they provide a framework for assessing and disclosing the climate alignment of ship finance portfolios of the banks with society's goals. Now, we will not go into too much detail, but effectively there are 4 principles. I'll try to summarize them quickly. Principle number one, the banks will assess the climate alignment of their portfolios on an annual basis, and there is specific methodology to do that to ensure that there's consistency. Principle number two, banks will rely on data that are already required by regulators and other approved parties, like classification societies. And this data is prepared by the shipping companies. In other words, the maritime world will be held accountable for their data submissions, not only to their usual traditional regulators, but also to their financiers. Principle number three, banks will enforce the principles, including relevant covenants, in every new shipping loan. There's even a standard clause that has been developed and is encouraged to be used. Now, we are starting to see environmental clauses being incorporated in new bank lending, even by Greek banks. So this is here already. The banks, and that's the fourth principle, the banks have to be transparent and publish their results and scores on their portfolio climate alignment annually. And this means that effectively banks will also be held accountable for doing their part, just as the maritime sector also will. Next slide, please. This slide presents the signatories. The list is growing, as you would suspect. The signatories have risen to 18. They were initially 11. And they now represent 150 billion of US dollars in bank financing towards the shipping sector. You can see some pretty big names there. And it is expected that more financial institutions will join the initiative. Next slide. Now, what does this development really mean in practice? And this is clearly something which is not only applicable to the maritime sector. Well, first of all, it's another example that ESG factors are becoming increasingly important. In fact, ESG factors, in this case, not only affect, but actually drive funding decisions. Funding will become more scarce and more expensive for those who will choose to ignore the ESG. And last but not least, this is an example that ESG directly is affecting not only the bottom line, not only liquidity, but ultimately the ability to continue in business. Next slide. As you can appreciate, there are enormous challenges given that the Poseidon Principles were only signed a year ago, and already the ship finance portfolio that they affect has grown by 50% in just this 1 year. However, the Poseidon Principles demonstrate that ESG factors in finance are really here to stay, and therefore action is needed. And so what is the way forward? Well, first of all, there needs to be a change in corporate culture. Corporate culture needs to become more governance-driven as opposed to compliance-driven. And what I mean by that is that, especially for smaller players, they should adopt a more committed, a more proactive, a more hands-on approach to adopting and monitoring these new requirements. It will not be practical to try and just tick the box, simply because there's really too much at stake here. The certificates, the licenses, finance, the lot. And also, of course, reputation, which is a very, very important intangible asset in business. There's clearly not one size fits all. And so companies may need to actually go back to their drawing board and rethink processes and procedures that will help not only reduce their environmental impact, but also maintain adequate audit trail to be able to prove it to their stakeholders. And that is the end of my short presentation. I hope you agree that the Poseidon Principles are a tangible example of how ESG are now redefining really the priorities of decision makers. Now, as I said, it's a huge topic. Uh, Please get in touch if you wish to discuss further. My details were given previously. And thank you very much indeed for having me and for the attention to my presentation.
Thank you very much. We will surely contact you for more information.